So it's the 19th, which is a Monday. There is a holiday in the US for the stock market, so it is closed. However, the futures market is open. As usual, I am on the ES, and it's what time is it now? So it's about 8:20. Okay, let's mark up this chart. All right, so we are on ES, and if we get something, then great. The first thing I've got to do, let's see, it's just mark up to 8:30. And just to get my bearings, I'm going to use indicators. Again, it's just to understand where we are in relation to Asia. Okay, I'm on the 5 minutes, but I'm going to go to 30 minutes just to give me a bigger picture. Let's have a look. Okay, so I'm just gonna wait and just to see what the market wants to do, and then I'll come back at 8:30, and then maybe I'll come back at 9:30 when we have hopefully we have some movement then, but I'm just going to wait. So there's only three things I am really looking for. Well, there's only one setup I'm only ever looking for. Only one. It's just one a day. But there's three things I'm looking for after 9:30 specifically. And that is direction, a fair value gap, and fibs. That's all I'm looking for, and that's what I've always looked for. 9:30, we have a nice calm open because it's a holiday. So that's my um, first session reference point is the 9:30. So session reference point. Like I said, I have other reference points that is historic and they influence the overall model, but my first reference session reference point is the 9:30 open. So I look at the 9:30 and I will assume there is no data to the left of it and just assume that 9:30 is kind of the first dot on your chart, right? Boom, you get a dot. When that dot appears, what you're now looking for is a direction. Okay, the dot is either going to go up or it's going to go down or it's just going to go sideways. And that's what you're looking for. And the best time frame to do that on for me is the 5 minutes. It's the 5 minutes. So you look at the 5 minutes. So it's a series of candles and you just wait. You just be patient, wait. It's going to play out over 30 minutes, 40 minutes, 45 minutes, usually around 30 minutes would be the average. It will play out and it'll say, hey, this is the direction I want to go into. And once you have that direction, you can actually measure that move. Once you measure that move, you can determine if that move is something you want to participate in, right? So if it's, for example, so anything for me, anything 20 plus points, I will participate in. So I only, very rarely, but I only ever use one contract. And this is historic. The next step, once we have direction, is fair value gap. So as the price moves down or moves up, we're going to mark all the fair value gaps as it moves. That's just step two. Because in step three, price is going to come back to it and we're going to trigger the trade. So usually we want one for fair value gap. Usually there's one. Sometimes you can get more than one. That's okay. And that fair value gap is typically in or around, so it overlaps with the 70-ish fib. That's where the fibs come in. So 70-ish fib. When I say 70-ish, it could be 70% or it could be 79%. Again, I'm rounding these numbers. So the numbers themselves don't, the fib number doesn't matter per se. The reason I use the fib is that the fib allows me to do what I used to do before, which was price clustering. With price clustering, what you did is you ran different fibs from different places, different angles. And if you had a cluster of these fibs in the same spot, then that becomes your your level, like your key level. That's what I used to do before, swing trading. But with day trading, intraday trading, I don't use price clustering. What I use is uh, fair value gaps. So the fair value gap, 5 minutes, must overlap with the fib. That's it. That's the only thing I'm looking for. And if it overlaps with the right, it's the if you're short, then it's the high of the fair value gap, and if you're long, it's the low of the fair value gap. That's your risk. So depending on how long that fair or wide, should I say, that fair value gap is, that determines your risk. And because that length or that width or the range of the bar was always typically the same for me, I stuck to just using one contract. So I have changed my screen to just the one view. It's about 10:28. It's a holiday in the US. The futures market is open and we are looking at the market. So let's talk about what we've done so far. Let's talk about what we're doing so far. At the moment, if I take away, let me just take away this indicator and I actually switch over to regular trading hours, um, you would see nothing because we're on holiday. But if I go back here, what I'm going to do is draw a line just right here, 9:30. This is our first reference point. So what are we looking for? Step one is direction, and direction is from 9:30. This is the primary point of direction. I am looking for from 9:30 so to 10 o'clock is the first part. Do we have clear direction? Based on what I'm looking at, we don't. We went down, we've gone back up, went down again. So it isn't clean. We don't have a nice clean, I'm going one way. So that's telling me this is not a good day to trade. Regardless of the fact that it's a holiday, the data is telling me this is not a good day to trade. So I've already decided there's going to be no trade. But the first thing I always look for is that direction between 9:30 and 10 o'clock. I will allow for an extension from 10 o'clock to 10:30, especially if you have a very strong trend. So if price is just going in one direction strongly, I have to wait for it to finish. I'm not just going to stop at 10 o'clock. And usually it will stop at the next time box window, which is the next 30-minute time box window, which is at 10:30. But that's not what we have here today. Today we have inconsistent, unreliable movement. First, it was down. You can consider that, okay, maybe that was a sweep, and then it was up. But if that was a sweep, why didn't we take out these highs before 10:30? We could still take them out, but we haven't. So there isn't any momentum either to the upside. I mean, this may turn out to be a PM trade, but I'm only focused on AM today, and I primarily focus on AM. My very first part of the model, which is do I have direction, was not fulfilled. And because of that, I'm actually not going to take a trade today. Not going to take a trade today. But I will explain that there's really only other two parts, additional parts to this. And that again is fair value gaps and fibs. In a completely different video, I'll probably show the three steps. But today, I can't really show anything because nothing's happened. We are not really doing anything today. So I think that's pretty much it. It's 10:32 for me. The session is over. We'll let's come back tomorrow and we'll see how that plays out. So no trade today, but how I trade the New York session, AM session specifically, is wait for the direction between 9:30 and 10 o'clock. Can extend. I mark out all the 5-minute fair value gaps in that one direction, and I just wait for a retrace into that fair value gap to take the trade for a measured move. By measured move, I just mean symmetry. So if you have a 20-point directional move, then I'm expecting ish 20-point measured move ish. So by ish, I mean uh, it can be good or nearly good. So it can be 20 points or it could be 18 points, nearly good. Sometimes it extends more than 20 points. But that's what I'm looking for. So we'll come back tomorrow and we'll do this all again and see if we can get through all steps.